Well, Matt Maley is the Chief Market Strategist at Miller Tabak & Co. Thank you, Matt, for joining me. Let's start off in the US. So the Fed holding interest rates steady. Is this the right move in your opinion? And what does that say about Kevin Warsh's approach?
Well, yeah, I definitely think it was the right move at least for right now. And it's kind of interesting because he definitely was able to, kind of reassert the Fed's independence under his leadership by kind of being somewhat forceful with his comments. But at the same time, he's not signaling that the Fed's going to be doing anything imminently in terms of rate hikes. But there's no question that his comments were more hawkish than people had been thinking going into it. And so we still have elevated odds that we'll see a rate hike before the year is over. I don't know that will be what happens, but it definitely has investors thinking a little bit differently about the Fed's role in the marketplace over the coming years.
Interest rates held in the UK too, but the Bank of England's Andrew Bailey is warning that the Iran deal will not stop a spike in inflation. How concerning is this, do you think, for the UK economy?
Well, it's definitely a concern. I mean, one of the things that I think people have been relying on was that we will see a dramatic drop in oil prices. And, of course, they've already come well off their highs. The question is, how much lower will they fall from here? Of course, the stock market, especially here in the U.S., has been pricing in that the Strait of Hormuz will reopen for quite some time. We wonder how much of that is already priced in. And more importantly, if prices don't come down as much and if the officials for both the UK and the US are correct and then the inflation remains sticky and stubbornly high, that's going to create some problems for a stock market that's very highly valued right now.
Matt, how would you assess the current inflation outlook in the US in comparison to the UK?
Well, it's the thing is that if you look at the official consensus numbers, the U.S. inflation outlook is a little bit lower than the U.K., but still at the same time they're above the targets that the central banks are looking for. And as much as Chairman Warsh said yesterday that he'd give it a little bit more leeway, he still wants it lower than it is now. He still wants a two handle here in the U.S. So that means there's still some more work to do, especially when you have both countries saying that inflation remains sticky.
To what extent does the decisions in one central bank affect the decisions in another?
Well, there doesn't seem to be any direct contact, although I'm sure the central bank, well, we all know that central banks around the world speak with each other frequently. But there's no question that the correlation between these two countries is very, very high. And so with the U.S., I think Warsh sent a clear signal that he's not going to be quite as dovish as some other Fed chairs have been in the past. And it also tells me that what people refer to as the Fed put may be a little bit further out of the money than it has been in the past. That will have an impact on the UK and other central banks as well.
Really briefly, if you will, what would you say is the outlook on both those economies as the global geopolitical uncertainties remain?
Yeah, I think that the growth is still there. It's still solid, but it's still low. It's not as strong as people are thinking. And then with both central banks saying that inflation will remain sticky, if they're correct, that could create some headwinds before the year is over.
Matt Maley, thank you very much indeed for that.
Thank you.